Hey everyone, Couch Investor back on our video for today. So let's talk about Celsius. Now that the stock has officially split, there was a stock split 3-1. So when you're watching the stock price right now, you're seeing the stock closer to $50. You're like, whoa, what happened? I thought it was closer to $150. Well, 3-1 stock split, nothing to worry about. Nothing has changed for the underlying business, nothing at all. Now, in this video, I want to provide a bit more information on the sector that they're playing in, the industry that they're playing in, and just the state of Celsius as we go into 2024. The important things to remember, because the stock is down close to 30% from the recent highs back in the close $60 or so. So first up, I want to start with the inflation numbers that we recently got. So the Consumer Price Index, or CPI report, for November indicated a 3.1% year-over-year increase compared with the 3.2% expected by economists and a 3.2% pace seen in October. Now, the closely watched food category was up 2.9% year-over-year, with food away from home up 5.3% during the month, and food at home up just 1.7%. Now, categories with prices holding up included carbonated drinks, that was up 3.6%, so the likes of Pepsi, Coca-Cola, and Celsius still have some pricing power. We've got even more data from Nielsen. So soda drink sales rose 4.2% year over year over the last 12 weeks. According to the latest Nielsen data, volume was down 3% during the period, while price mix was up 7.2%. Now, if we go and scroll down here, we'll look at sales were stronger in the energy drink sector. Sales rose 8.2% over the 12-week tracking period, with volume 6.8% higher and price mix up 1.4%. Celsius Holdings impressed again with 149% year-over-year sales growth to jump to a market share position of 9.3%. Now, if you compare that to a major competitor, Monster Beverage, their market share sits at 37.5%. That includes Bang, and that's also still above Red Bull's market share of 33.8%. So here you can see Celsius still a small player in that industry. Continuing here, we've got a comment by an analyst at Morgan Stanley. While we see continued robust growth runway for Celsius in the US from increasing items per store, improving placement in coolers, and growth in non-track channels, we note increasingly difficult comps over the next several quarters as Celsius cycles the substantial distribution and velocity growth since the PepsiCo distribution began, and as the tailwind from Bang's share decline dissipates and potentially turns to a headwind. So again, this is more focused on the earnings report, whether or not we're going to get huge beats, top and bottom line. Like I said, there will be some companies that in 2024 will have extremely easy year-over-year comparisons. Companies that have performed extremely well in 2023 will probably have a more difficult time in 2024. That doesn't mean that the business is not doing well. Just from a Wall Street standpoint, seeing those growth rates not as great as in 2023 will maybe have an impact, or probably have an impact on the stock. And this is basically the point right here. He doesn't say that the business will perform badly. He just said from a Wall Street standpoint, next year the year-over-year comparisons will be a bit difficult. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. We have over 31,000 subscribers right now. Really appreciate all the support you've given me in 2023. Let's try and make 2024 an even better year. And if you want to support me even further, do check out the links down in the description and the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now remember, when they reported their latest earnings report, the stock went down despite an amazing quarter. So what has happened? Well, let me refresh your memory. So in the earnings call, they got asked this question. You've been in the system for a little over a year now with regards to Pepsi. It looks like you built inventory in 3Q. Just some color on what you expect to happen with these inventory levels in the fourth quarter as we approach a low seasonality quarter ahead of winter. Do you expect any changes in their number of days on hand? To which they got an answer here. As we look last year, it was difficult to really kind of peg whether inventories were pulled down or it was just a matter of seasonality. At the end of the day, the Pepsi team would have to determine if they're going to do any kind of management around the inventory as they're going into Q1. I will say we are excited as we move into 2024, but there's no guarantees in terms of the inventory management from that perspective. So Hearing that, but also looking at the recent numbers that we've got, I think they're dealing with this inventory issue, let's call it, pretty well so far. I mean, there's still close to a half a month left in December for this quarter. So far, so good. Now, talking about 2024 growth plans for years ahead. Now, me, as someone that lives outside of the United States, to me, Celsius, until I saw it in various YouTube videos, various marketing campaigns, saw it on X, people talk about that. To me, it was an unknown brand because internationally their presence is not yet well known. It's not Red Bull, it's not Monster or any other energy drink out there. But in the United States, it's now already pretty well known, which means that the international expansion has just started. The brand recognition outside the United States is still pretty small. Now, by the way, in the United States, unlike many other energy drinks, it does appeal to men and women as well, which to me means that they are addressing a market segment, a niche that was not addressed before by the likes of Monster or Red Bull. Now, going back to the international segment here, we can go back to the earnings call. So international sales grew approximately 56% in the third quarter, totaling $13.6 million compared to $8.7 million in the same quarter last year, driven in large part by successful innovation launches, increased velocity, and brand awareness. The first major international market in which we plan to expand to under the PepsiCo umbrella is Canada. It's expected to launch in the first quarter of 2024, so here they have another growth lever that they can pull for 2024, despite having those difficult year-over-year comparisons. They believe there is significant opportunities for incremental growth over the next 3 to 5 years as we execute our international expansion blueprint in a handful of countries in 2024, with opportunities for further expansion in 2025 and 26 and beyond. Again, the story here, despite the stock being up, over 30,000% in the last couple of years, the business here, growth is still early days, in my opinion. Of course, they still have to execute correctly. Just because something works in the United States does not mean that it will work internationally, but so far they're executing quite well. I mean, when the brand is viewed positively and you mix that with a drink that is actually good, healthier than the competitors, I mean, you've got something special on your hands here. Of course, not everyone will be a fan of Celsius, maybe different tastes, I don't know, can be, but so far they're doing quite well, otherwise the business numbers would have looked much different. And I mean, if we look at the stock's performance, this year the stock is up 41%, it's at an $11.38 billion market cap, forward PE of 57.6 times, so yes, I mean, looking at the PE right now doesn't make that much sense, but okay, it's here anyways. But you can see that the average price target from the analyst standpoint sits at $68.64, which means it's close to a 40% increase from the price it is today. Now, just because an analyst is, or a lot of analysts are bullish on a stock and the stock price is much higher than what it is right now, does not mean that you have to buy it. No, it just gives you the perception of where Wall Street is right now with regards to Celsius. Now, moving on to the next thing is a small refresher from the latest earnings report. So revenue increased 104% year over year. In North America, that increased 108% year over year. Internationally, 46%. Gross margin is up 780 basis points. This is, by the way, year-to-date 2023, year-to-date 2022. Net income is up 184%, diluted earnings per share 180%, and adjusted EBITDA is up 301%. As you can see, this company is growing across the board, triple digits, minus the international one, but still, I mean, 46% year-to-date growth is quite a lot. Then I have to show you this again. Again, like I said in the previous videos, this press release does look a bit amateurish, but okay, so far as the numbers are great, I don't mind. So they said here on Amazon, Celsius is the highest selling energy drink with a 21.4% share of the energy drink category, ahead of Monster at 18.6% and Red Bull at 13%. And the Amazon Q3 sales were $22.2 million versus $15.6 million same period last year, so that's up 42%. So as you can see, they're getting a nice push from their partnership with Pepsi for the distribution, but even in the online sphere, on Amazon, it is getting that brand recognition as well, and we see that with the share there, things are going into the right direction. So this leads me to the last thing here, which is the graph. Like I said at the start of this video, the stock is down close to 30% from the highs we saw in September. But right now, what we see this week, this is on a weekly, by the way, we saw here a little rejection, which is positive, when it went under the 200-day moving average, which means that the 200-day moving average area could serve us as a support. Of course, there are still a couple of days left. This week, Jerome Powell still has to speak, and when he speaks, he usually breaks or makes the market, even though you don't really have to listen to Jerome Powell when you invest in companies like Celsius or any other company, because he's not one of the guys managing those companies. He's just here to talk about macro. And to be honest, I feel that we are in a period of time where it doesn't really matter what he says right now. Nobody is really in a trust mode. Whether he appears to be hawkish or dovish, the market will definitely think the opposite. It's just the way things work right now in the markets. But overall, I mean, if we can stay above the 200-day moving average, that is pretty positive. But I feel inclined to add that if we break that 200-day moving average, then yes, the area here between $35 and $40, I would say this would be a nice little area to buy or open a position. So overall, Celsius, the business is still doing well. The data suggests that things are only getting started. Now, despite it having a great 2023, I still expect them to have a good 2024. Yes, the year-over-year comparisons will look a bit worse, let's say, than what we had in 2023. But look at how the business is performing, top and bottom line. Look at their market share as well, and especially the international expansion. How is that going to look like in 2024 and onwards? Yes, the stock can go lower, the stock can go higher as well. The stock split has already happened. I know someone commented, what about the insider selling? I'll repeat it again. Insiders sell for many, many reasons. And towards the end of the year, we've seen a lot of insider sales, whether it's RSU, options buying, tax reasons, you name it. There are many, many reasons why insider sells. Remember, they have a private life as well, and maybe they sell to pay taxes, to buy more shares. Who knows? So don't be alarmed when you see insider selling. Sometimes yes, but most of the times it's just a nothing burger. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.